3. How to build a Stoic edge in 3 steps. Every investor who has found success in the market has had some sort of advantage, an edge. Having an edge means you have something, be it information, skills, or strategies, that gives you an advantage over every other investor in the world. Before I propose a solid and proven edge to you in this book, let's briefly look at 4 common types of advantages that successful investors have had. 1. The information edge. By researching a company and industry thoroughly, you can get a good understanding of that company's competitive position in the market. The more information you can acquire and consume about any given company, the better investment decisions you can make.
And you don't need to rely only on investment analysis done by others. If you're considering investing in an ice cream company, you can do your own surveys and research into the company's products. Acquiring an information edge is harder than most people assume. You need to draw new conclusions from the information publicly available, which can take hours of analysis and requires a comprehensive understanding of investment theories. The positive is that information is freely available, which makes the information edge attainable in theory. 2. The quant edge. In the late 1960s, former math professor Edward Thorp started a hedge fund that was different from everyone else's. Thorp used quantitative analysis to beat the market for nearly every year of his fund's existence. The funds that use such strategies are now called quants, and they use complex math to make trading systems.
4. The Stoic edge. Personal investing is done by humans. Even if we decide to make use of AI or a robo-advisor to develop an investment strategy, we make the final calls. And human decision-making is often flawed because our emotions are at play. An investor who manages their emotions and doesn't make any common mistakes automatically has an advantage over the investors who don't have that ability. I call that the Stoic edge, and all the successful investors I've studied possess that edge. After all, it's impossible to stay wealthy by making too many mistakes and losing money. Unlike the information edge, the quant edge, and the size edge, the Stoic edge is attainable for every investor and easily grasped. These advantages are not mutually exclusive. An investor like Warren Buffett has multiple edges. He has an information edge because he spends an average of 5 hours a day reading everything from newspapers to annual reports on the companies he's interested in. Through his reading, he examines companies that most people overlook. 4. The Stoic edge. Personal investing is done by humans. Even if we decide to make use of AI or a robo-advisor to develop an investment strategy, we make the final calls. And human decision-making is often flawed because our emotions are at play. An investor who manages their emotions and doesn't make any common mistakes automatically has an advantage over the investors who don't have that ability. I call that the Stoic edge, and all the successful investors I've studied possess that edge. After all, it's impossible to stay wealthy by making too many mistakes and losing money. Unlike the information edge, the quant edge, and the size edge, the Stoic edge is attainable for every investor and easily grasped. These advantages are not mutually exclusive. An investor like Warren Buffett has multiple edges. He has an information edge because he spends an average of 5 hours a day reading everything from newspapers to annual reports on the companies he's interested in. Through his reading, he examines companies that most people overlook. It also happens that Buffett is the biggest investor in the world, often having more than $100 billion in cash alone. But he doesn't have only a size and information advantage, he also has the most admirable Stoic edge in the world of investing. Dozens of books are dedicated to dissecting Warren Buffett's investing strategy and behavior. The goal of these books is to look at what makes him successful so we can copy that behavior. But what those books miss is that the average investor lacks all the advantages that Buffett has. It's difficult to have one advantage in the market, let alone 3. That's why most people who read about successful investors don't become wealthy in the market unless they have an edge. 3 steps to build a Stoic edge: attainability, Stoic edge, information edge, Size edge, quant edge. Figure 2, the Stoic edge ranks high in attainability and low in complexity. That makes it the ideal edge for all investors. The edge of a Stoic is their indifference to everything that's outside their control. If you look at day-to-day situations, you'll see that we waste a lot of emotional energy by responding to things we don't control. Getting angry because there's traffic is a waste of your energy. Looking at your portfolio during a stock market crash is equally fruitless. What matters isn't what happens to us, it's how we respond. Here's my proposition. To build long-term wealth in the stock market, you need to invest throughout your lifetime, no matter what's going on. To be so consistent that you keep investing in spite of feelings like fear and greed, you need to develop the only edge that's accessible to all investors, the Stoic edge. When you possess that edge, you will have the mental fortitude to stick to your investing strategy, which will make you wealthier over time. No matter what type of investing strategy you currently follow, you will benefit from adopting a Stoic edge. If you're a value or growth investor, the Stoic edge helps you to avoid selling your stocks during a time when you should be staying the course. If you're a momentum trader, the framework of this book helps you to remove the slightest bit of hesitation or conflict from your trades. What if you don't have an investing strategy? You're not alone. A survey showed that half of the Americans who want to invest in stocks don't know where to start. Based on the research and experience of the smartest investors in history, there is one strategy that gets recommended repeatedly. It's a strategy that provides good returns and has a proven track record since the 1920s, namely passive investing in an exchange-traded fund, ETF, that tracks the S&P 500 index. An ETF gives you exposure to a basket of stocks or other securities without your having to purchase them individually. ETFs are issued by investment companies such as BlackRock, Vanguard, and Fidelity, which then go out and buy each of the stocks in that basket. The ETFs trade on a public exchange and can be purchased through a stockbroker. For instance, the Vanguard S&P 500 ETF is highly popular and can be found via any stock trading app with its ticker symbol, a unique symbol that allows you to identify an asset on an exchange, VOO. When you invest in an S&P 500 ETF, you instantly invest in the 500 largest companies across 11 sectors, like healthcare, technology, real estate, financials, and so forth, in the United States. Why the US? Even if you live in any other country in the world and are happy living there, you still want to put your money to work in the greatest economy in the world. This is why I personally invest in the S&P 500, and I recommend this strategy to my family members. The beauty of this strategy is that it takes almost no time to execute and has a proven track record. The S&P 500's return of 11.44% a year on average since 1980 means your money doubles roughly every 6 years. That doesn't sound like a bad deal to me, considering the fact that it takes virtually no time to invest in the S&P 500. But to make sure you stick to that strategy for your entire life, you need a Stoic edge. What I've done in this book is extract the most important lessons from Stoicism, apply them to wealth building, and then boil them down to 3 simple steps that you can easily remember. If you follow this path, you will acquire a Stoic edge, which will help you to build wealth in the stock market. The foundation of this book is based on 3 steps that are backed by Stoicism, namely investing in yourself, accepting loss, and letting your results compound over time. I believe this is the first framework for building a Stoic edge as an investor. Each step ties into the most important aspect of investing and of Stoicism, managing your emotions. This path might not create overnight millionaires, but it does help you to build wealth. The Stoic path to wealth. Figure 3. The Stoic path to wealth starts with investing in our skills and earning money. When we can distance ourselves from our money and accept the idea of potential loss,
true wealth
we can allow it
synthesizes
to
time
compound.
and wisdom.
How this book
This
helps you to
is
build
your
wealth.
path to protected sanity.
While investing philosophies help you to get the best return on your money, Stoicism helps you to get the best return on your time. The Stoic path to wealth does both. It helps you to build wealth through the stock market while protecting your time and sanity. You'll find a combination of ancient wisdom and practical advice from modern successful investors. I will give you a synthesis of the most useful ideas wise philosophers and investors have already figured out. Every chapter starts with a profile of an investor. A book about wealth building that doesn't include stories about prolific investors like Warren Buffett, Peter Lynch, John Bogle, and Stanley Druckenmiller would be lacking a huge part of financial history. Even though you might know about these investors, in this book, you will uncover new insights about their lives in terms of Stoicism. In addition to these well-known investors, I also tell the stories of phenomenally successful, yet lesser-known people like Geraldine Weiss, Cathie Wood, Jesse Livermore, Edward Thorpe, and Monish Pabrai. Weiss was the first successful female investor on Wall Street, paving the way for women on Wall Street today. Wood changed the way we look at disruptive companies and short-term financial losses. Livermore was the first famous Wall Street trader who built a booming career out of buying and selling stocks, and young traders still admire his advice from more than 100 years ago. Thorpe was the first to introduce math to investing. Pabrai is the most striking example of an immigrant who built a fortune in the US by executing solid investment advice instead of reinventing the wheel. I've extracted the lessons from these investors' lives and put them into the terms of Stoic philosophy. The structure of every chapter is as follows. First, you'll learn about the defining time of an investor's career. And then I'll show how you can apply those lessons in a Stoic way in your own journey toward building wealth. Every chapter also includes a small segment called Meditate on This. These are Stoic thought exercises meant to practice your ability to control your emotions.
Finally, at the end of the book, you'll find a section called Stoic Investing Techniques. This section will answer all your "how should I do this" questions. If you have an appetite to pick individual stocks or trade options, futures, crypto, and so forth, I will also give you a method for trading that you can use in conjunction with your other long-term investment strategy. Even though I'm a long-term investor who invests in the S&P 500 index, I also trade individual stocks and futures. But I pick my trades carefully, cap my losses, and most important, make sure my trading is profitable. When it comes to building wealth, it's not about how much you know. It's about how good you are at managing your emotions. The better you manage your emotions, the more consistent you will be. The more consistent you are, the better you can execute your investing strategy, which is what makes you wealthy. This mental aspect of investing is by far the most important part.
By the end of this book, you will have that Stoic edge. Meditate on this. That things have no hold on the soul. They stand there, unmoving, outside it. Disturbance comes only from within, from our own perceptions. Marcus Aurelius. The Stoic dichotomy of control says that we control our actions, but not the outcomes of what we do. A person who always eats healthy and exercises can still die from heart disease. What do we control when it comes to investing? Our strategy and whether we follow through. Form the habit of looking at your actions when you talk about investing. What are you going to do, and how are you going to do it? Avoid thinking about outcomes. How much will you actually earn with investing? When will you cash out? These outcomes are not within our control, so it's a waste of energy to focus on them in the present moment. Principle 1. Invest in yourself. Not to assume it's impossible because you find it hard, but to recognize that if it's humanly possible, you can do it too. Marcus Aurelius.